Oh, you can see me. You can share that link that you can see. Clinton, good evening. James, good evening. Sorry, took a while to set up. How are you guys doing? It's always good to say hi to the guys. Are your microphones okay?
Tuko hapa tunasikiza.
Sawa sawa. Good stuff, good stuff. So hii live ni more of tutapitia setups za wiki. We'll go over the setups of the week, and then someone asked about how to trade US30. Yeah, so we'll just spend a few minutes. This will not take long, but it's always good to go over the week, see how you performed, see what you missed. So of course we'll start with the favorite pair, GBP USD, and I'll go all the way to the daily time frame first, so that you can see where we are. Okay, you just see where we are. So if you look at the daily time frame, you'll notice we have been ranging all through here. We are in a range. So what a range means is we're not breaking these highs, and let me put that background as yellow, and we are also not breaking these lows, down here. So we keep bouncing off. So this started from mid-December, so around the 14th. So bouncing off this area of support, that area of resistance, support, resistance, support, resistance. Now we are at support again. So this is a whole month and a half of sideways movement. So if someone was a swing trader, then this would be a very long month for them, because they fairly don't have a lot going on unless they're trading the area of resistance or trading the area of support. But as Adesal, we've learned how to trade both in and out. So we'll jump onto Monday. Okay, so I'll just put this Monday, 29th. So what we always do is we do three things. First, we look at news for the week. So this week has been full of news. There was interest rates from the US interest rates, UK, Euro, and then we've had NFP on the same week, and we've had FOMC on the same week. So crazy week. I was really expecting that the news would break us out of this zone, but yeah, we still are in a very crazy zone. So you will find that most of the time, if you have big targets, large targets, they're not reached, you'd find the market is only hitting maybe your take profit 1, take profit 2. It's not going for those big moves because you don't have a strong, bias. So if you look at Monday, the only two things I've done is I've marked the low of Friday. Okay, so I'll just use the lines that I use. So this was the low of Friday and the high of Friday. Okay, so the reason we mark those and the equilibrium, of course, we also mark the equilibrium. So those three things are what we look for on the daily time frame. Look at the previous day, Look at the highest point it got to, the lowest point it got to, and the midpoint. So the midpoint is around there. So the reason you look at the midpoint is the market is playing around the higher side of the candle, the previous day's candle. Then you look to sell. If you're in the lower side, you look to buy. Why? The higher side is the premium price, the lower side is the discount price. So this also varies when you are in a trend or you are in a consolidation. So this one was easy for consolidation because all you're looking for is for the market to either come to the lowest point, then you buy, or come to the highest point, then you sell. Okay, because you're in a consolidation. But if you're in a trending market, the narrative changes. Okay, so we'll cover that once we are talking about trending markets. Then from there, we jump all the way to the 15 minutes. We don't need to do the 1 hour, 4 hour, 1 hour, 30 minutes. That's just a lot of information. And what you're trying to do as a trader is you're trying to just find one place to enter, yeah, and exit to make your trading simple. So you don't want to complicate things. You don't want to overcomplicate your trading life. Okay. So in the 15 minutes, just before London session, we always mark the high of the day and the low of the day. So that's what we did. We marked the high of the day just before the London session. We usually mark that there, and the low of the day. Okay. So anyone that is in Adesal would understand what that means. Then you go down to the 5 minutes to look for entries. So the entries are only after you have marked out your zones. So you know what you're looking for above these zones. Okay. This was the Monday. This was Monday. So like we said, you want, if the market goes up to above the equilibrium of the previous day, then you're looking for sell potential because you're now at an expensive price. And then what we see on Monday is the market actually pushed up above the high of the day and above the equilibrium of Friday. And then after that, it dipped. Okay, so someone asked me to explain this trade and why I took the sell. Okay, so it dipped. Where did it dip? If you notice, and I'm going to use a line chart here just to make it clearer. If you notice, all through here, the market was going high, high, higher, low, high, higher, low, high, high, higher, low, higher, high. Then it broke bearish. So this drop sideways, then drop. And I'll explain this. This drop sideways, then drop was particularly a bearish move that broke structure. Okay. If you go to the candles, I talked about this. How do you know a swing point or a structure point? Is you look at the 3 weeks. So you look at, if you see here, there's a week here, the lowest week, and the other week is way above here. So this was a structure there. Yeah, so this was a structure point. If I go to the 3 minute on the same, don't jump onto the 3 minute, but if I go to the 3 minute on the same, I'd see this was a higher low. Okay, this was a higher low. Then from this higher low, market went to the higher high that is above the equilibrium point. Then you can see this very strong bearish move. Then sideways movement. Remember we said if you see a doji, cancel it. So these 3 candles, you ignore them. Okay, so the 3 candles there don't mean anything. So what you're waiting for is a break below this swing point, okay, and a candle forming below that is a bearish candle that does not touch the lowest point of this swing point. So this was a confirmation that the market had broken structure bearish. Okay, it was a confirmation that the market had broken structure bearish. So since it had done that and had come all the way below the high of the day, I was very comfortable looking for the 2 things that we look for. One, an imbalance. I'll not particularly explain the imbalance because I expect you guys to know what the imbalance is. Okay, So the imbalance, that's the first imbalance, and then there's a second imbalance here. Okay. And then if I use the Fibonacci, I'm just looking for confluences now. What are confluences? There are multiple confirmations of market, of areas in the market to look for reversals. So I can see that just above the 61 level, there's this imbalance. So that was my setup. Okay. If you are waiting for more confirmation, then you'd have waited for this engulfing candle and taken the trade below here. So my trade was an entry at the top there in that imbalance. My stop loss for GU, I just put it above the higher high. For EU, you have to put it at 120. We'll talk about that. Okay. So GU is very decisive. So once it finds an area of resistance, does not play around too much. So at that point, then if I'm at the 61 level, I'm targeting the negative 61. That's my ultimate take profit. Okay. So that was the trade. All right. That was the first trade on Monday. If you are using the engulfing candle pattern, then same concept, but now you're engulfing. Once the engulfing candle pattern forms, place your entry there. Stop loss just above the engulfing for GU. Okay, let me make that very clear. That is for GU. Then your target is that negative 61. Okay, so you have to be patient. This is what I'm talking about when I say the markets don't have strong biases. You find that they play around a lot. So you have to be patient trading such a market. You have to be very patient trading such a market. Okay, that was the first setup. Now the second setup, I'm pretty sure very few caught. The second setup was because the market was in a zone. So if you notice this, let me move this to the side. So between London and New York, you can see that the market formed a lower low, then pushed above this week to form a higher high, and pushed below again to form a lower low. So below the lowest point here, you can see the market formed a lower low. Okay. So usually when market is behaving like this, all you're waiting for, because this is a consolidation, is for the market to come back to the resistance area here. Okay. Let me use maybe a red line. Okay. You're looking for the market to come to this resistance or anywhere between this higher high and this lower low. Okay. So it came from a higher high to a lower low. So you're waiting for the market to come back into either the imbalances or to the top here, because we can see that now the market is moving sideways. Okay. So here it came all the way up during New York session, found resistance at this point and formed an engulfing candle. So if you break this candle down, break this engulfing candle down, if you go down to, we've learned this. If you go down to the 1 minute, I'm going to go there because I want us to see that transition. You'll notice a break of structure. Okay, this was Monday. So you'll notice a break of structure here. It's not the cleanest in the world, but there was a break of structure. Higher low, high, okay, higher high, higher low, higher high, higher low, lower high, lower low. So there was a break of structure here. Yeah, then lower high, lower low, lower high, then continue to go down. But we've talked about this, that the easiest way is to find an engulfing candle that follows the rules of the week. Okay, so the week of the engulfing candle has to be longer than the week of the candle being engulfed. Okay, so you can see this week is longer than this week. The engulfing candle has completely engulfed this bullish candle. So this was a low risk, high reward trade. It's called a low risk, high reward trade because the market has pulled back all the way to close to 100%. So the risk for this is quite minimal. Okay, that's the risk, 5 pip risk. And then using your Fibonacci, so the engulfing candle has formed at the 88 level. So your target is the 100 or the negative 27. Sorry, the target is 0, the 0 level or negative 27, depending on how these candles reacted around the 0, the 100 level or the 88 level. So this was a very good trade, a very, very good trade. I'm pretty sure it was hard for people to, accept it because there was a lot of movement during New York. This was a very good trade. If you missed that, then you could have caught the next trade here on a lower high. Once it got to the negative 27, these are all opportunities. Yeah. Lower high to lower low, came back 38 level, engulfing candle pattern. This was another entry. Stop loss just above. Target negative 27 again. Okay. And particularly the market was going all the way to negative 61s, but that's just the first target. Like we've talked about, you just target the closest because the market is ranging. Okay. So those are 3 setups in one day, and that was Monday. Okay. So I can go to Tuesday and fairly do the same thing. All right. I can go to Tuesday and fairly do the same thing. So for Tuesday, the high of the day was up here. The low of the day was somewhere around here. But we can see that the market came down, came back up, formed this engulfing candle pattern here, consolidated before going down. Okay. All right. So if I'm to remove majority of the drawings, all I need to do is pull a fib from that high to that low. Okay, so this was not an engulfing candle pattern. This was between 10 and 11. So in London, this is between 7 and 8 a.m. So we're waiting for the candle that formed at 9. So we can see this nice bearish. No, sorry, at 8. So this was 7 to 8. So from 8 a.m., which is 11 a.m. Kenyan time, you can see this engulfing candle pattern. And taking it off the fib level, yeah, taking it off that fib level, it was a big candle. It was a very big candle. So the risk to reward was 1.2. And because it touched the 61 level, you could have held to the second take profit for a 2-hour trade. It only actualized in New York session. Okay. So that was the setup for Tuesday. There's a bullish setup on Tuesday as well. It was not the cleanest. Okay. I always talk about this. It was not the cleanest, forming an engulfing candle that almost gets to the 0 level. Okay. So this one could have just left it. If you took it, you still made profit. Because if you use your Fibonacci to measure this, it was a 23 level trade. So I always talk about these 23 level trades. They're not the best for me, but some people still take them. So for this one, the risk was around 4 pips, and the market went for a 2, 4, was it around a 2 point something, 1.6 to around 2.5 R. But the target was the negative 61. Okay. So remember, you don't have to hold trades for 100 pips risking 50. You can actually take a trade with a small risk of 5 pips and target 10. You're the same. Both of you risking 1% are still going to earn. Okay. Wednesday was a very interesting day because we had the low of the day here being tested the first time. Okay. It was tested the first time, market didn't break structure, came back again. So if you open the 3-minute on this, we can see. I hope you guys are following through. If you have any questions, make sure you ask, because we're just going through what the market was doing through this week. Okay. Feel free to ask. if you have any question.
Have a question.
Yes.
Mko poa?
Kabisa.
Kabisa.
Mimi ile I will write return on Monday ile kitu ulisema about the structure point. Unajua mimi najua ile structure ya clean break kama ile ya clean break. Sijajua hiyo ya weeks.
Okay, so right. I will answer that. So for Wednesday, the 3-minute also was not very clean, but some of us got this trade. Ian, I'm sure you got this trade. I remember you post. So the market pushed above, formed a higher high, came back into this imbalance. I think you bought here and like held the trade. I don't know where you got out from. It was a very good trade. I don't know where you got out from, but it was a very good trade. I usually stick to the 5-minute. On GU, I just mark out my zones. I know where the liquidity is, and then I look for setups once the market violates those liquidity zones. But yes, there was no other setup on Monday that I could see during our 3-hour session, 3-hour periods, apart from now this one. So this came in New York. It was quite interesting because you could see the market came from this low all the way to the higher high. Yeah. Then when it pulled back, it didn't come to, I remember someone in the group saying they were waiting for imbalances to be tested down here. And I'll talk about that today. So there are usually 2 options. Let me talk about it now. Okay. I can even write this somewhere. So if the market violates or takes out a liquidity point, then breaks structure. Okay, that's our golden pattern. This is the pattern that we always want to see before we take a buy. And the inverse being higher high, higher low, higher high, lower low. Then you're looking for an entry here to take to the lower low. Yeah. So for here, you're waiting for the market to come to a zone. Then you take your buy to the higher high. So these are 2 scenarios that I want you to look at. So one is you have an imbalance. Okay, so you have an imbalance and you're waiting for the market to come to that imbalance for you to take that sell. Quite prime, and that works very nicely. Okay, but also remember this: there's also a scenario where the market will come to any place between this higher high and this lower low, or this lower low and this higher high, then form an engulfing candle pattern. Okay, so when it forms an engulfing candle pattern, you want it to have at least 2 things. You want it to have an imbalance that it had formed, then has tested, then has formed the engulfing candle. Yeah, I hope you're writing it somewhere or listing it somewhere, or you already know these things. So it's either it finds an imbalance and forms an engulfing candle off that imbalance. Okay, that's the first thing. Second, it finds support where there was previous resistance, like there, or now in this case here. And how do you know it has found support? Again, it will come to that zone, find and form an engulfing candle pattern. Okay, or the third point is it comes to an imbalance and respects that imbalance. And for you to trade those 3 scenarios, the particulars are different. If you're trading an imbalance, you'll put a pending order. So you'll put your pending order there, then your stop loss will be above that higher high. Yeah, we've talked about this. I'm just maybe reminding you. So you'll put your entry, pending order, stop loss above the higher high, and you leave that trade. It goes your way, it does not go your way, you leave it. Why? Because you trust the market to come to that zone. Okay. Or you're seated, you're an active trader, you're a day trader, and you wait for the market to come to that zone, then form your engulfing candle pattern. Okay, so nice blue candle, bearish, bullish, nice engulfing candle pattern. So for this, once the engulfing candle pattern has formed, then your risk is below the pattern, because and remember I told you this and we talked about this and you've seen it happen so many times, that engulfing candle pattern is a break of structure in the lower time frame. So case in point, here we have an imbalance down here. Okay. So we have another imbalance there. Okay. Then we have another imbalance that was tested. Looks small, but it exists there. And because the market was highly volatile, that imbalance was tested, printed an engulfing candle pattern. So for this one, someone said they were waiting for the market to come down here. If once it forms this pattern, it has told you that it is now back to going up. Okay, so at that point, you just want to take your trade. And of course, your risk is not down here. Your risk is now only just below the pattern. Remember, that particularly works for GU and what we're going to talk about today, US30. And gold, yes, for most of these US pairs. For JPY pairs, I would rather you give it some room to breathe. Give it that full room to breathe, because JPY is very hectic. Okay, so that's your setup. This was the setup for Wednesday. Okay, that was the setup for Wednesday. So I hope that this has sunk. That you either wait, and this could miss you. If you put your pending order and you go, this could be missed. The market could decide to just respect maybe an imbalance that is right here. And it just gets there, then continues to go. Okay. If you work like that, you will have, of course, less trades, but at the end of the day, that's your method. It needs to be tested and proven by you and nobody else. Okay. So for the question about swing point, I'll answer you just after going over this trade. There's a trade here that took us out. Yes, Thursday. Not the best 2 days of my life, but it is what it is. So we can see market was bearish to some point. Why we're talking about this without looking at the higher time frame is because we know we're in a zone. We're just looking for very small setups within the market. Okay, and we are catching them, and we're actually doing 2R, 3R, 4R trades. So this was not the best experience, but again, it's because we are consolidating. 1, 2, we were waiting for interest rates on Thursday. I totally failed to remember that. So this sell was off this engulfing candle at 11. Okay, it was the 11 o'clock engulfing candle. Market came to a lower low, from a lower high to a lower low, played around, came to that 38 level, tested the imbalance, then formed that engulfing candle pattern. I took this sell. And then once it went even lower, confirmed even more momentum, I added my orders. Then it slapped me. And then in the same process, why I think there was a lesson there, is if you have two conflicting setups, you just wait it out. It means the market is consolidating. So on the 3-minute, you can see the market took out this low. Mercury below the low of the day, then broke structure and formed a higher high. So Ian was in this buy. Right, Ian?
I was in that buy. Hiyo siku ilikuwa siku mbaya. 3 losses.
Don't worry, don't worry. If I would show you my knee for that day, you just laugh at me. That's fine. So, so you can notice this one only went to like 1 hour. That was the best it did. Didn't take you out yet. Played around the whole of London session, then took you out on the last 30 minutes. Now, the same thing during the same, because I insist on working with M5 for me, is there was a break. So I was in the sell. Then I saw the buy. Once this started coming up, I saw the buy. So I closed some of my sales, but I secured some and said I would, arbitrage. Yeah, slap me in the face. So the sales took me out and the buys took me out at the same day. Eventually, so the market formed a zone here, tested the same zone but took out liquidity. So it was just stop hunting. It happens. Then if you had now taken the trade again, looking to sell, stop hunted again, then our last engulfing candle here is what took the market from the 38 level all the way to the negative 61. So this was the actual trade. Now I don't know how many times someone will be able to sit through a zoning market, ngongangwa tu makofi 3 times in a row before the market actually takes the full move for a 4.5 hour trade. So 1% down, possibly even, no, this is not a trade here. So this was maybe the second sell. Worth it? I don't know. You tell me. So on the New York session, we had sort of something similar. So the market went up, came down, formed an engulfing candle. There was no imbalance, so this was not valid. Okay, this was not valid. Came back down again. This looked like it had touched, an imbalance, but it hadn't. I think it was there's a broker that has this imbalance tested. I don't know whether it was a wonder. Then engulfing candle pattern, and the market completely flew for over 100 and something pips.
Yes, it was a wonder.
It was a wonder, yes. So what happened is at 6, the news came into the imbalance. So the guys that trade the imbalance, this was a good trade for you. It was major risk because the risk was 28 pips, but the reward was worthwhile because the reward was 140. It still went up. Today to around 120. So for guys holding that trade, if you use now your fib, lower low to higher high, then you had like a 2 point something trade because came down and tested the 61 level. So 2 point down 60 pips. That would have been a good day. But this was all because we had major news in London, then there was news in New York. Okay. And then of course there's today, which was not a trading day per se because of NFP. I have a system for trading NFP, but today it didn't work out. Or rather, it didn't form, didn't retest. So it took out the highs, didn't retest. Just completely dipped. Okay. But if you took any trade after that, for the NFP drop, you're in profit. If you took like a lower high trade, then you should be in good profit. There was an engulfing candle pattern here. There was one here, all of which continued to go down. Okay, so let's talk about that one thing. Then we go to US30. So I've talked about a swing. There's something called a swing point, and what someone would see as a structure point. Okay, so I'm just dropping nuggets here. I don't know how. I don't know who is taking notes, but I'm dropping a nugget here. So for the most part, we've been learning structure with regard to candles. So your line chart will only plot structure with regard to candles. It will not factor in wicks. Okay. But I remember I've mentioned this a couple of times that your wicks tell a story. Okay. Your wicks tell a story. And that is why when we're looking at if the market broke or formed a higher high to a lower low, an example is this one, is because it broke through this week. Yeah. Okay, so let me put that as black. This lowest week. So what you need to notice, or what is good to notice here, is as the candles are forming, let me put that bearish candle, and then I'll copy it, move that one there, and I copy this and put it in there. And now this will be a bullish candle. I hope my color of candles are not confusing you. Black is bearish, blue is bullish. Okay, and I'll put that. That's my wick for that candle. That's my wick for that candle. All my wicks are always black. Yeah, I'll put that. Visual order, move to black. Okay. So as you're looking at this market, so you can see, also add one more for the sake of this explanation. Okay. So this I'm taking my time so that you can continue downloading what you're seeing. And my OCD will not allow me to do shoddy things. Okay. So if you look at this movement, so this bearish, then bullish. You can see this is, the market has found support around this zone. Okay. But the narrative here is, look at the wick. So there's a high wick here, a lowest wick here, and a wick that is higher up here. Okay. So even as the market is continuing to go up, you can notice that the market found a lowest point here before it continued going up. So 1, 2, 3, the lowest wick is the low point. It's called a swing point. Okay, it's called a swing point. So a swing point, you can see it's like the market is sort of swinging. Like for example, and I'll give an example on the chart. I'm going to only mark wicks. Okay, so you can see from that wick, there, that wick. Okay, so I want you to zoom in. I want to zoom in here so that you can see that kind of structure. So these are swing points. So this is a low swing point. Above, comes down, goes up, comes down, goes up, comes down, goes up, comes down, goes up. So when the market is breaking structure, this might sound new, but it's not. Whatever is happening here, if I go down to the lower time frame, say the 1 minute, this is a structure point, like how you would say, this is a higher high, and this is a lower low, this is a lower high, this is a lower low. Okay. The reason I'm saying that is because all these points, remember, all time frames are relevant. Okay. So this week is information that the market is giving you. This is the lowest point it got to this point. This is the swing high, swing low, came up again to this high, came down, came up. So this point here was the swing point that the market needed to break fast before it even breaks structure. Okay, before it even breaks structure, i.e. structure being that higher low on the 5 minute, okay, this swing point had to be broken first. What you see is the market came down, nice bearish candles, then consolidation, then a new candle that went all the way down. So this was that confirmation candle that the market had broken structure. Okay. So why I'm introducing this is it's not a concept that is new. I'm just improving also on how I look at the markets. The same way I told you guys. For so long as we are growing, you will grow with us. Okay. So if we go and learn something cleaner, better, a more crisp way of looking at the markets, we come here, we share it. Okay. So this is that swing point. So if I go to the 3-minute time frame, I'm hoping this will take me back without giving me some stress. All right. So this is the 3-minute time frame. So we can see now the 3-minute time frame has more information. You can see bearish candle, bullish, bearish, bullish. Okay, bearish, bullish. So this swing point that looked like a week has a bearish candle, then a bullish candle. More so if I go to the 1 minute, which is why I always jump from the 5 to the 1, because there's usually enough candles in between. Okay. The same way I'll jump from the daily to the 1 hour. There's usually more information in between. So the information on this, one is much better. So you can see your swing point. This is that swing point. It's just that I marked it on the 5 minute, but the swing point is that one, that low here. Then market went up to this swing point here, then came down, that swing point. So that swing point is actually a structure point on the 1 minute. Okay. So the market could break this, but until it broke this one, it had not broken major structure. We've talked about that. And the irony is, if you notice, the market came back to the last imbalance here. The market came back to the last imbalance here. So if you were trading the 1 minute, this was also a valid entry. The same entry is the entry that I've used to take the trade on the 5 minute. This is the swing point. Okay. A swing point on the 5 minute is a structure point on the 1 minute. Okay. So that's the overall understanding. And of course, we'll talk about it more. You'll look at it, you'll find it, you'll see it happening more and more. And then you're able to make decisions based on that swing point. Okay. Leon, I hope I've answered you. I've not spoken like this for a while. Yeah.
Yeah, you backtest niangalie saa ndio nisome zaidi.
Sawa.
I need to backtest it and learn more in the markets.
Exactly. We are always growing. Okay. So I hope so far so good, so that I can go and ask and go over US30. I'm just going to go over it just for a few minutes. Okay. Silence means consent. James Clinton, silence means consent. I hope so. Okay, so
I'm listening keenly.
wow, good stuff. So you guys are very curious about US30, and I like that. It's good.
Talk to me directly.
Mrs. EU really has been slapping US30 right, left, and center. And she had questions. But it's good. We are learning together. So US30 it's an index. There's a couple of things that, of course, would be easier learned when we, create a course for indices, because risk management on indices is slightly different. The pips count is different. The session is different. But something interesting is everything works fairly the same. Okay. with regards to structure and how to read market structure, indices are still fairly the same. Okay. So for indices, of course, your stop losses cannot be tight. That's the first and most obvious thing about an index, because it's very subjective to a lot of market conditions. Two, if you're trading indices, then you want to be careful about news. So there's market news, and then there's open of market. So those are some facts that you need to align yourself with as you're learning how to trade indices. Okay. But with regard to structure, everything is fairly the same. The market breaks a London high or an Asian high, and breaks structure, you look for sales. If it breaks structure bullish, you look for buys. Okay. So this is where the golden pattern is very effective. Okay. It is very, very effective. You have to be very careful with your exit points. So in indices, unless you're buying, your sales have to have very tight exits. Okay, I can't stress that enough. Usually, for the most part, the indices are bullish, and by bullish I mean for the longest time have been going up. Okay, unless we have crashes like, I don't know, economic crashes that are crazy. If you're averaging the performance of the 30 most traded companies in the US market, usually you'll have more bullish momentum than bearish. Okay, so if you're holding buys, you can hold long. If you're finding sell positions, you need to exit quick. That's just a tip. That's a tip I learned from someone who has been trading indices for the last 3 years. Okay, Q banks for those who know. Okay, so with regard to buys, this is what you're looking for. So I'm on Monday here. I'm just looking at this week, having been a crazy week. So this was the first, I think this was the one trade I was looking at on Monday. You can see here, the market came up, nice bullish movement, took out this liquidity zone, or rather this high, then completely broke structure bearish. By completely breaking structure, you can see a swing point here. Yeah, swing points. So you can see a swing point here. Okay. This is, notice, I'm only looking at the New York session. I'm not looking at London unless I'm marking the highs and lows. I'm on the New York session. So took out, broke structure. Once it broke structure, came back up, imbalance. So you can notice here the risk reward on sales is not very nice. Okay, so here you can see the market came up, then pushed down. Once it gets to a liquidity point, you're out of that trade. Or once it gets to like the first take profit, negative 27, you're out of that trade. So this was, came back 61 level, formed an engulfing candle pattern. Your entry is here inside this imbalance, plays around, take profit, out of that trade. But for buys, this is where the things get interesting. Let me go to, is it Tuesday? There's a day here. So either way, I can look at this and see market came down, pushed all the way up from a higher high, came back down. There is no imbalance all the way here. But once it formed the engulfing candle pattern at the higher low, it really, like, went all the way up to the end of the day. But I was looking at a setup, is it yesterday? There's a bullish setup. Yeah. No, so it was not. So this is today. So it was not this week. This week has been sloppy for all markets. Let me see whether I can find that setup. Where was that? This was last week Monday. Let me see. Let me see whether this was the one. No. I'll find it. I'll share that screenshot because I was looking at it. But either way, let's come back again to same setup. So here you can see a lower low, lower high, higher low, high. So a high, it's not higher than this. So a lower high, higher low, sort of a high, higher low, higher high, then a breakdown to a lower low. And then the imbalance set up here. So you can see the market came into the imbalance, then dipped. Same way we trade. Same way we trade. Then again, once it formed this lower low, came back again. Same sort of setup. Notice this, the candles here are printed differently. They have gaps, they have volume gaps, they have so many things. That's why I was saying indices are slightly different. You'll need to get used to reading candles that have so many gaps. Okay, these are all called volume gaps. An engulfing candle pattern, 38 level, completely dropped to negative 61. Usually you'll want to be trading US 30 in the New York session. London session is very slow. Then you can notice the New York session, the candles are pretty big. Then also that means you need to get accustomed to like crazy moves all at once with very big risk. Very, very big risk. Okay. So here we can see market came, took out this low, broke structure, formed a new higher high, but came all the way back to this imbalance. Played around there close to hours before now going up to form a new higher high. Yeah. Then trading such zones are very easy. Notice this is New York session, so higher high, higher low, engulfing candle, exit, higher low, engulfing pattern, exit, higher low, imbalance, exit, higher low, engulfing candle pattern, exit. Very easy to trade when you know what you're doing. Even this sell, okay. So for this one, you can easily even trade the whole of New York session. If you're someone who goes to work, comes back home late, you can trade it very nicely. 50 level, target 0 level. Remember, when you're selling, don't have big targets. Engulfing candle pattern, take this sell, stop loss here, gets to 0 level, you're out. Okay. So go the same concepts that you've learned in this in Adesal. Go and use them on US 30, backtest US 30 and see whether you can actually see setups. Yes, so I think I was testing the whole of last week. You can see here, liquidity taken, higher high formed. There is a swing point there for someone who now has understood swing points, or there is a structure point there that was taken. So by structure point being taken or broken, what does that mean? Bullish candle and a new bullish candle forms that does not touch that line. That's the rule. Market came back into the imbalance, formed an engulfing candle pattern. You can see the risk to reward. Notice the stop loss is below here because you don't want to squeeze US 30. Okay. If you use your fib, this was I think a 78 level zone, negative 27, negative 61 was hit Ukoju. Okay. So then if you notice that the market is not clear, and this is a rule that I need to share with you guys. If you notice the market is not clear, don't trade it. John always does that. If he sees the market is not clear, he does not trade. He avoids a lot of losses. If the market is sloppy, you will burn your account for nothing. Okay, so if the market is sloppy, give yourself a break that day. Remember, you only need 2 to 3 good trades a week. You don't need to trade every day. You don't need to make money every day. 2 to 3 trades a week, and you're good. So backtest US30 with exactly the same rules you've learned. Exactly the same rules you've learned. If you feel the 5 minute is too, compressed for you, do 15. Do 1 hour. Remember this rule. I always give you this rule. Trade the time frame that is most comfortable for your eyes. If you cannot read structure, you cannot trade it. So make sure you're trading the most comfortable for your eyes. For the most guys that I've seen that trade US30, they trade on the 4-hour time frame. Those guys are holding trades for weeks, days. Same concept everywhere. Okay, lower low, high high, balance, high high. Comes back again, breaks from a high high. I don't know how this works, but if I was to be asked, I'm sure there was a setup here. Once the market took this low, there was a setup here. Yeah, higher high, higher low, inside this imbalance zone, goes up, comes back, new imbalance zone here, goes up. So because you've learned time frame correlation, if you find yourself in such a place, market has formed a high, comes back to an imbalance, then you can break this down. You can enter here and find a break of structure inside this imbalance. Remember, because this is a higher time frame, you want to go to the lower time frame and find a better entry. Today was NFP, so I'm pretty sure it was a bit crazy. But you go down to the lower time frame, you find a setup. I think here's the setup. No, that is not clear. 15 minutes. Still not clear. I'd work with 5 for the comfort of my eyes. Higher high here, higher low. This imbalance was tested and never broken. Higher high. Higher low, engulfing candle pattern, higher high. Lower low, then pushed back up. Now this is post session hours. Yeah. So,
I think, Adam, I think for your study, I've found that if I work with 5 minutes, it's much more clearer and gives me very good setups as compared to maybe 15 minutes. I don't know
good
if
stuff.
that's the case.
For me, yes. For me, 5 minutes on US pairs is very clear. Both US30. I saw Clinton trading Nasdaq. Same thing. The 5 minute on these time frames is very clear. You can easily read structure, market breaking highs, breaking lows, entering imbalances, all that. It's very clear on the 5 minute, and you have very good risk reward on the 5 minutes. Yeah. So it's all up to us. It's our job. So get backtesting. Backtest as much as you can. Yeah. Backtest as much as you can. All right. So any questions? You guys have any questions that you feel?
So if you are trading indices watu wa rise kama sisi wa $1,000 akawa na 500 hatuwezi because of the stop losses or the lot sizes.
What you do, because I noticed they have they've changed their lot sizes, their lot sizing for indices. So you find on an index what you trade maybe a one lot. See, one lot on Forex is $10 a pip. So for indices, you find maybe that one lot is like $0.1 a pip. You get. So you will need to go and test it. Go write the lowest maybe lots, or just open a demo account with the same broker, and then test on the demo account and see what lot sizes work with, the indies. Okay.
Do the GH markets have indices,
Yes, they do.
or we have to go
Yes.
derive?
They do. They do. They have.
Okay.
They do.
Adam,
Oof.
Yes.
niko na swali hapa. Najua hapa watu wanaweza jua tu mimi ni beginner.
No problem.
I had placed nilikuwa nimeplace a sell limit kwa NFP news pale juu.
Sell limit.
Yeah,
On what pair?
on the GBP USD.
Mm-hmm.
Hapo time ya NFP hapo kitu 428 hapo.
Mm-hmm.
I'd placed it just the right place in a way that inge drop inge activate the sell stop and hit the take profit.
Sell stop or sell limit?
Sell limit, sorry, sell limit.
Okay.
Nimechoka bana. So
Uh-huh.
the moment tu hivi ili click
Mm.
ilipotea tu yote yenyewe. So kindly nisaidie hapa kuelewa why did it just vanish? I didn't even find it in my history. Ilipotea tu hivyo yote.
Which broker?
Ilienda ika-activate na ika-hit take profit but it did not appear on my history. Like it did not nini. Ni kama ilipotea tu.
Which broker?
Broker kivipi
Ama
sasa?
which? Is it a prop firm?
Hapana, si ninatumianga tu ile vile tu the setup that you gave me ile tu nimekuwa nikitumia MT5 nini hapo.
So one of two things, Had you put a stop loss?
No, siko nimeka stop loss, siko to take profit.
Oh, okay.
Yeah.
Basi walifunga.
I was certain it will be a sell. Lakini sasa sikutaka kuiweka yote ati kikubwa hivi, niliweka tu a nice amount take my trade, tengeneza pesa yangu nitoke.
So since you had placed it, and if you look at your history and on MT5, if you don't find the limit, because it's supposed to keep record of both the limit and the recorded entry and stop loss or take profit. So if you can find the limit, then you can check kama ni limit ilifungwa na market na broker, because the brokers can do that at times.
Vanish tu yenyewe tu, it was there, ikaenda tu hivi chini, then it just vanished. I was so confused. Nilibaki like, ala, sinafaa kuwa ndani.
Send me the history. There's a part of history that has orders. Ukifungua MT5, kuna part ya history inakuanga na orders. It records both the taken trades and missed trades and closed trades and all those trades. So utaenda hapo kwa orders. So you'll see orders. Kwa MT5 there's if you had buy limits, sell limits, you'll see filled or not filled.
Sasa hiyo ya nini siku haiko hapa. It's not here. Ilichezwa.
Then I'm sorry, your broker did that thing.
So someone told me today that I'm supposed to manually.
No.
So ni nini hapo nilikosa?
How many times have we got NFP trades with pending orders? But it's fine. What we've learned from that particular broker is that they closed your order and deleted it. I'm very, very sorry for that. I don't know which broker that is, but we'll figure it out and we'll get back to them. It's scope. I think you should reach out to your account manager.
Akona pesa yangu.
Yes, they have your money. If that trade was actually missed, then they have your money. Because a sell order is activated by the bid price. So if the bid price did touch your order, then it should go. If it didn't touch your order, then you should see the pending order still floating.
It just vanished, maze.
Don't worry.
Anyway, nilikuwa bado ndani lakini nisema asante.
No problem. No problem.
Masomo
You have survived. You have survived. So if you notice, for most news events, this one was a news event. So for most news events, if the market had previously broken, had formed like a golden pattern, be sure, rest assured that the market will come back to retest that imbalance during the news event. Okay. There was a trade I shared. I think this is the last thing I'll say before I leave, unless anyone else has a burning question. There's a trade I shared last week. Let me see if I can find it. Where the market came back into an imbalance, activated the order, went our way, then eventually, yeah, this is the one. There's news here. So this is the very annoying trade. So the market came back into this imbalance. So you notice that market comes from a lower low to a higher high with an imbalance that is left. Once the news comes, it will come and activate that order. So it activated, the risk was 5 pips, then the market went like 23. That was like 4.8 or something like that. And it was a good trade. It was a good trade. Okay. So I think I'll leave it at that. Unless someone else has a burning question. It is still a Friday. We need to wind up. But we'll be doing this weekly. So that was the goal. The goal was to do this weekly. Okay. We'll be doing this weekly. It gives us time to go over what we've done, and then coming into the new week, we know what to expect in the market. All right. So I'm hoping for an eventful February, because January has been bad in regards to consolidating markets. We're not having big profits, just small, tiny things.
Hiyo consolidation market imeniboo sana hii Januari.
Don't worry, can't last forever. Right. So see, we shall reconvene next week.
Thank you.
We'll also go back to live, but we'll talk. We'll tell you guys within the week. But good job so far. You guys are doing very, very well in the group. Continue.
Thank you. Good night,
This will be a
everyone.
weekly thing.
Yes, we'll be doing it weekly.
Ni sawa basi. Same time, eh?
Yes, same time.
Okay.
All right.
Have a nice one, eh?
Have a nice one. See you guys.
Have a nice one. Bye. Good night.